Good afternoon. You're watching Businessworld Live. I'm Jes Delos Santos. Let's take a look at how the local bourse closed today, Friday. All right, heightened restrictions getting the better of local stocks today. The PSEi decreased the most in Asia, tumbling 2.9% to 6,436.10. That brings the index to a 4.4% weekly loss, and year-to-date the index lower by 9.9%, up from just 8%, an 8% decline at the start of the week. Now, Astro Del Castillo of First Grade in Finance says investors are staying away due to uncertainties factoring in the rising cases, the reimposition of restrictions, and the long holiday break for Holy Week that's coming in 2 weeks. Now, in a bid to arrest the surge in cases, which yesterday rose to over 5,000, authorities are putting back in place stricter restrictions as Holy Week nears. Capacity for religious gatherings has been reduced to 30%, but it's up to LGUs to actually raise that to 50%, depending on the situation in their locality. But as for restaurants and food places, there is now a 50% cap for GCQ areas, including Metro Manila, while venue capacity in cinemas, driving schools, as well as arcades, libraries, museums, and event venues has been reduced to 30%. The restrictions will be in place for 2 weeks. Among listed mall and restaurant operators, Jollibee and SM Prime dropped the most today. You have SM Prime here slumping 5 7/10%, now valued at 34 pesos and 25 centavos a share, while Jollibee also tanking by 5 2/10%, now at 176 pesos a piece. But other consumer stocks still managing to eke out gains today. URC, in fact, heads a pack here, up 2 8/10%. Pure Gold likewise in the positive territory, inching higher by 2 2/10%. Of the 30 members, only 6 ended the day in the positive territory. But the day's biggest drag, PLDT, that plunged 7 4/10% to 1,195 a share. The telco giant, of course, being one of the stocks held by foreign funds here. Foreign fund dumping today at its highest in 8 days, with net sales at 1.3 billion pesos. That marks 23 straight days of net foreign selling. That also brings total of net foreign selling for the week at 3.41 billion pesos. This bit of news as well, not unable to lift sentiment today here. Russian vaccine Sputnik V has been granted emergency use authorization. This now becomes the fourth vaccine to be granted such permit. Another vaccine developments, Moderna has also inked an agreement with the government and the private sector to supply 20 million doses, according to vaccine czar Carlito Galvez. He said that the government will be procuring 3 million doses of Sputnik V. But zeroing in on one of the day's big market news here, SM taking control of the Go Group. This as a conglomerate buys out a 31.7% stake of Chelsea. That's going to add, of course, to their stake, which is already at 30.5%. Now, SM Investments will pay 8 pesos and 50 centavos per share for the Chelsea stake, and the same price for the tender offer for the remaining shares. The deal is going to value to go at about 20.9 billion pesos. According to Chelsea, they are going to use the proceeds to help pay down the loan it got to actually buy the stake. Chelsea expects to complete the sale within the next 3 months. The move should give SM as well more leeway and room to leverage its retail network of malls with the Go's logistics capability. Now, after that bit of news, to Go climbed as much as 8.6%, as you can see in this chart right here, represented by the white line. But that has since pared back gains, ending Friday down 2 9/10%, now at 9 pesos and 37 centavos a share. Chelsea, on the other hand, is represented by the yellow line here at the bottom chart. That edged higher by 4.5% to 3 pesos and 72 centavos a share, while SM Investments, as represented by the orange line here, joins the sell-off across the board, declining by 2 9/10% to 958.50 apiece. Now, the Philippines is battling not just the COVID-19 pandemic, but also the African swine fever. The Department of Agriculture has formally asked President Rodrigo Duterte to declare a state of emergency in the country to try to contain ASF. Now, for more on what this means, let me bring in Regina Lei. She's our editor for Business News. Reg, we know ASF has been a problem for some time. What are the implications of this state of emergency?
Hi, Jess. Good afternoon to everyone. Look, the biggest thing that this state of emergency will do is really unlock and mobilize funds to help the local agriculture industry, which, as you pointed out in your intro, is battling a double whammy of COVID-19 lockdowns and the African swine fever. So it's much like during times of calamities, the times of disasters. The first thing the national government has to do is to declare a state of calamity. It means that now LGUs, local government units, have a bigger hand and responsibility in dealing with ASF. They're required to set aside funds, for example, for border control measures or to help local hog raisers repopulate their supply. It also mandates that both LGUs and government agencies have to work together speedily. That's the operative word here, speedily, to prevent the further spread of the virus. So that part right there, strengthening the coordination and commitment of the local government units and the respective government agencies is going to be very important, because we know at this point that more than 3 million pigs have died or were culled since the virus was first detected in the country in 2019. And that, that drop in pork supply, we know that that's what's pushing prices higher. That's what's causing our inflation numbers every month to go awry. So this is going to be crucial in the battle to fight ASF. Jess.
Okay, so in short, a state of emergency will help unlock funds to help hog farmers here. But does that mean that the supply of pork should actually normalize in the coming months? And the government has also started importing more, right?
That's right, Jess. The short answer to your question is I think we're still a long way away from that happening, from pork supply normalizing. First of all, this request, President Duterte still has to approve this request for state of emergency, right? We don't have word yet from Malacanang on when or if that might be happening. Second of all, there is some disagreement on the ground about the amount of pork that should be imported. This group known as the Agricultural Sector Alliance of the Philippines, or AGAP, has written to Senate President Tito Soto just this week, in fact, questioning why the Department of Agriculture wants to import so much pork. It says the DA increased what's known as the MAV, the minimum access volume, from about 54,000 metric tons to 400,000 metric tons. And this group, which is composed of 80,000 backyard hog raisers, says that's really, really excessive. It's also questioning why the DA is planning to lower tariffs for importers to between roughly 5 to 15% from what's been prescribed of 30 to 40%. AGAP is saying that, if that happens, the national government is going to lose nearly 14 billion pesos in revenues, and that's money that it can use to essentially to shore up the industry, to help the backyard hog raisers, right? And then there's another twist. There's something else that's complicating the problem, and it's what's known as the tongpat scheme or kickback scheme. It was Senator Ping Lacson who first exposed this. He was looking at the data behind that AGAP had submitted to him, and he says there's a syndicate that stands to benefit from tariffs on pork imports being lowered. And in fact, by AGAP's estimate, it could be as much as 6 billion pesos a year. So Senator Ping Lacson has basically promised to file a resolution to invest, seeking further investigation into this alleged scheme. And so the short answer there, Jess, is while a state of emergency is a big step in the right direction, I think it's going to be just as important to get to the root of this this alleged tongpats or kickback scheme that we're hearing about in the industry.
Okay, that's another dirt dug here as this whole pork crisis drags on. Thank you very much for your time today. Again, thank you for that report, Regina Lei, One News Business Editor. Here are other headlines we're keeping our eyes on. Local firms saw continued declines in their gross revenue in the last quarter of 2020, with the pandemic dragging the economy to a recession. Data from the Philippine Statistics Authority showed total gross revenue index falling 12.4% year on year in the fourth quarter. This, however, was lower than the 13% decline recorded during the previous quarter. Services posted the biggest contraction of 32%. Other declines during that period were from the transportation, storage, and communication sectors, as well as real estate and utilities. Bucking the declines were the indices for financial and insurance activities, as well as mining. Economists expect modest gains in the gross revenue index and the country's GDP moving forward, noting rising infections may constrain recovery efforts. Now, PESA has approved 13.2 billion pesos in new investment pledges this month. The Investment Promotion Agency gave the go-ahead for 33 new projects, which are expected to generate close to 2,500 jobs. These newly approved projects brought PESA's 2021 total to 24.5 billion pesos so far. PESA is aiming to reach over 100 billion pesos in investment pledges this year, higher than last year's 95 billion pesos. Last year's print dropped more than 19% compared with 2019 approvals. PESA Director General Charito Plaza said the approval of new projects is the agency's positive action to continuously support the country's economy and competitiveness despite the impact of COVID-19. Remittances slid for the second straight month in January, bucking what normally is a good season for the inflow of overseas money. Is this a foreshadowing of what lies ahead this year, remittance-wise? For some insights, we have on the show Earl Melivo, Country Director of WorldRemit. Good afternoon, Earl.
Good afternoon, Jess, and good afternoon to our viewers. Thank you for having me.
Okay, so to kick things off, that 1.7% slide in January, that's a departure from the normal uptrend at the start of the year. What drove that?
Essentially, these are economic implications of what's happening in the many of the host countries. But one thing I can be very positive about is what happened in 2020 will actually be a reflection of what will happen in 2021. What do I mean by that? First off, we didn't expect last year to be staying flat. We only declined by 0.8% in terms of total volume of inward remittances to the Philippines. There were projections that were drastic last year that didn't come into fruition, and so we are very much happy that happened. I do think, and I still am positive, that this year will be a rebound year for overseas Filipino remittances.
And what's going to push that rebound there?
As we see more and more economies open up, more and more people would be inoculated, and host countries would tend to provide more economic activities, and also obviously opportunities for overseas Filipinos. That would only translate growth in terms of flows to the Philippines.
But at the same time, one point of concern would be that repatriation efforts are still ongoing. In fact, if I'm not mistaken, you have close to 500,000 OFWs already being repatriated so far from 2020 up to this year. And we're expecting that to still continuously grow. Isn't that going to hamper growth in remittances, remittance inflows?
It will be at a certain extent, but we have to note that there are also redeployments happening already. So last year we saw the restrictions, the heaviest restrictions in our country and also in the host countries. One case in particular are seafarers. So there used to be no deployments at all for several months, but because of the Green Lane program of the government, I'd see there are more and more redeployments happening, especially in the seafaring industry. We have to note that 21% of total remittances or transfers to the Philippines are actually contributed by our seafarers. The main difference that happened last year versus 2019 is that there was a decline in this sector. And so I think because Filipino seafarers are still on demand, there are 1.5 million seafarers globally, and almost 25% are actually Filipinos, and Filipinos are still on demand in that sector. So we think that this will mitigate repatriations for land-based. Again, as I said earlier, there are also economic factors that will come into play because of the lesser restrictions and the continuous inoculation in many of the host countries.
So do I take it to mean as well that we're not expecting that much of a lift coming from land-based workers?
Uh, you can say that, but it's too early to be very honest. I'd say in my own projections, there will be about 2% increase. Very positively would be about 4 or 5%.
Now, in terms of geography, are there any markets here which we should be banking on?
I'd say the major markets would still major sending markets to the Philippines would still be the greatest factors. Would contribute the greatest factors. Middle East would still be an area of concern for us. U.S. Given the Biden stimulus package and the positive things that the administration is doing, I do think there will be positive impact on remittances from the U.S. Remember, about 40% of transfers to the Philippines are actually coming from the US. So last year we sustained about 5% growth. Nobody expected that really. And this year would be a better year, as many analysts would say. So there's only an uplift that we're seeing in the market, although there will still be challenging send markets, particularly the likes of Japan, UAE, even the UK. But land-based remittances will continue to increase as we see it from Singapore, Qatar, Korea, Taiwan. Those countries who managed to do well in managing the pandemic in their various countries.
Okay, now one other point of concern here, Earl, is that of course you now have at least domestically restrictions being reimposed here, being tightened once again. How does that affect financial inclusion, especially for OFW families?
That's a very good question. The keyword there really is adaptability. During the first half of the year, second quarter of last year, there were strict lockdowns in place in our country, but that did hamper remittances to be paid out or to reach the Filipino beneficiaries, and so the remittance companies like WorldRemit play a role in that aspect. And we have seen, because of the adoption to digital financial services like mobile wallets in the Philippines, which has been increasing since last year, and bridging it through digital means of sending money 24 by 7 with the likes of WorldRemit services, there shouldn't be any concern in terms of whether the current lockdowns or a stricter lockdown would be in place. Again, the general population is essentially adapting into the new norm, and so is
And,
the government.
and lastly, now, Earl, what's your outlook here for World Remit in terms of services here? How are you looking to at least ramp up your services for OFWs?
As a digital first company, we tend to continuously improve the services that we have. Obviously, we have our local partners that we closely work with, and so having the right services, such as sending to 60 plus banks in the Philippines, having the availability of cash through our 26,000 partner locations, and also having the ability to send instantly to mobile wallets, that can only mean growth for the company. And obviously, that can only mean more value for our customers, both existing and potential ones.
All right, some bright outlook there for World Remit, at least for the year. Thank you very much for your time this afternoon. Philippines Country Director of World Remit, Earl Melivo. Thank you, Earl.
Thank you, Jess.
And those are the biggest news this trading day, March 19, 2021. Catch Business World live again Monday next week at 9:30 a.m. for the market open and 3:15 p.m. for the market close. I'm Jes Delos Santos. We are One News. Mask on, wash hands, and stay safe, Philippines. Have a great weekend.